Hello, welcome, my dear students. This is your teacher, Dr. Usama Kashwa, and this is about the MGT 102 regarding your topic, the financial management for non-financial managers. And we will go through directly into the topic. Here we go. Yeah, here we go. So, this is a PowerPoint presentation for the finance for non-financial managers. And we will go through some aspects like overall view of the financial management, what is the meaning of the financial management, and then we'll move to another points like the financial analysis. External environment, we have always the external environment is affecting about the decision making and about the financial decisions. External environment is all what is around the organization, and that it can affect on the operations, all the operations of the organization. So, how the external environment can impact on financial statements. We have economic front. How is the situation of the economic? Is it recession? Is it inflation? Is it deflation? Is it mild economic situation? Political fronts also. The system of policy which is there, is it a tyrant political, like democratic, autocratic systems, federal, monarchy, whatever, the system of the political system there. Global and open world economies. We know the word global. The word global means grow from globalization, which means that the world become like a small village. And in between the countries now, there is an open gates. Each country is trying to open wide the doors of investment to the whole world. Technological changes. We are living in a period of technological changes now in everything, in all the fields. Uh, you can feel this in all the aspects of life now. The velocity and the speed of the technological changes become very, very intense, and it is very quickly now we find a rapid change in the technology levels. Product life cycle. The product is having a life cycle like any other thing. The product is having from the start of self introduction, then there is growth, then there is mature, then there is fail down or declination. Manufacturing side, also the way how the country is using the manufacturing. Are we using intensive capital or intensive human resource? What we are using, we depend on the capital more or we depend more on the labors based on the level of technology and the unemployment rates. All this affect also about the financial decisions. Okay, the changing rule of financial management between yesterday and between today. Today, we have internal activities for the financial management, like the working capital. Working capital are those current assets that start with cash and turn into cash within 1 year. Capital budgeting means how to plan for the investments. Management information system, and this depends more on the IT that was not in the past, but this is nowadays. The focus nowadays in the financial management, and this is very important, the focus is in the economy and the efficiency and the effectiveness. Efficiency is to do the thing, do the work without any waste resources. This is the efficiency. Effectiveness, no. Do the right thing regardless how it will cost, but I will do the things which supposed to be right. Operating and financial matters also. Those are of the concerns of nowadays of the financial management, which was not in the past. How about yesterday, the financial management in the past? They care about external activities. Here today, we care about internal activities, they care about the external. We care about what's inside the organization today. Before that, in the past, they used to care only about what is going outside the organization. The factors, like the factors which we talked before, like those factors, were a point of the concern for the management in the past. Okay. Mergers means two companies come together. A question: a big organization, a big company, or a big factory will take a big a small factory inside it. I mean, it will take it within. It will include it. Okay, reorganization also, like the re-engineering and this, how to reorganize your work, how to reorganize your structure. All this goes into the category of reorganization. Recapitalization. Sometimes some of the companies which is having a problems regarding capital, and they need more capital or more funds, then they have to issue stocks and bonds in the stock or in the exchange. In that case, they will try to find out more capitals, this kind of recapitalization, or a change in the form of the capital itself of the organization. Trying the focus nowadays in economy, efficiency, and effectiveness, but the focus in the past was on how to raise the funds, from where I can bring the money and where I can invest this money, and the legal matters as well. And also, now we care about the legal matters, about everything, the ethic decisions, social responsibilities. I am not living in this world alone. I am not living in this world alone. I am surrounded by other people and companies. And that's what we call the social responsibility and a kind of responsibility towards the environment which we are living in. And now most of the companies are trying to get ISO 14001, which is the environmental friendly. Okay. Uh, the role of financial management, how we are doing in the business profitable, how much cash do we have in hand, what should we spend on our funds, where will our funds come from, how will our investors' interests be protected, and how much will it cost. Those are the points of concern for the management today. Who is there for the financial management? We have the board of directors, the CEO, we have CFO, VP marketing, this is the vice president of marketing department, vice president for production, vice president for human resource. Then we have also operating managers on the third line, treasurers and controllers. This is the financial management, the responsibilities and the structure. Like you see here, this is the top line or top management, this level. This is the middle management, and this one down is the low level management. Here, the responsibility of the controllers and the treasurers. So we have the controllers, like they care about the general accounting, cost accounting, credit and collections, management information system, trade and payable, corporate accounting, internal auditing, budget and analysis, systems and procedures, planning and controlling, interpreting financial reports, evaluating and consultation, and preparing reports for government agencies and reports for capital assets. Those are the responsibilities of the controllers. How about the responsibilities of the treasurers? Raising capitals, investors relations, short-term borrowing. They are responsible about short-term borrowing, how to find where to get the funds and where to get from. Dividends means the stocks and interest payment. Insurance management, how to insure about their own capital or as their assets. Analysis of investment securities, retire, retirement funds, property funds, property taxes, investment portfolio, and cash flow requirements, actuarial, and underwriting policy and manual tax administration. Those are all the responsibilities of the treasurer. Uh, we have four financial objectives. First one is efficiency. The second one is liquidity. Liquidity means the ability to cover your own, that your assets will cover your own liabilities in the short run. Growth. Your investments are growing or no? How is your revenues? How is your working capital? How is your non-current assets? How is your profit for the year? This is the growth. Okay. Stability. Stability, total insolvency. Debit is out of a proportion. Like the equity is how much in relation to the debt. Debt's how much and equity is how much. Okay. Return on revenues, like return on investments. Return on investments, how it should be. The return on investments in simply is the profit, the net profit divided by the capital invested. Net profit divided by the capital invested. How it looks like. Okay. So the return on investments is 1,000 or 0.088%. This 8% for a dollar or 8% dollar. Internal use retained earning will be 5% and external use. So I will keep from extra from this money, I will keep for internal retained earning. I will keep it in the safe of the box of or in the company without holding them, without dividing them on the trades or the laborers or the workers. And external use, I will put 3 cents. Like if I will spend 5 cents retained in the safe of the company without any movement from them for investment, there are 3 will go external for investments. Okay. The retained or the retained earning, it will be, it's 5. Look at this, it's 5 cents. 3 cents of them will be for non-current assets, and 2 cents of them will be devoted for current assets. Okay. But the external use, the 3 cents, 2 cents will go for the stocks or dividends. We call them stocks. And 1 cent will go for debt reduction so that I will try to less my debts, to lower the level of my debts. Debts is very bad for any company because it means that you owe the people money. So I will devote 1 cent for it. So how you see the 8 cents, the return on revenue, like like as example, $1 will give me profits 8 cents. $1 will give me profits 8 cents. What I will do with the 8 cents? This is the how uh, I will act, and what is the objective or the game or the goal of the task of the financial management is to divide this amounts of money based in what you see here in this grid. Okay. We'll go now to the types of business decisions, and we'll have investing decisions, and this is important, operating decisions, this is the second one, and the financing decisions. So we have 3 types of decisions. Okay. The investing decisions is regarding the non-current assets and the current assets. They both go in the investing decisions. Okay. And it's done by the managers as well, because managers are the one who's taking this kind of decisions. It is done in the top management always. Operating decisions is done also by managers. Like what? Like statement of income, the revenues, the cost of sales, the gross profit, the operating expenses, the profit before taxes, income tax expenses, profit for the year. Okay. But there is also the third kind, which is called financing decision. It will take the profit of the year, and this profits, we will keep it retained. Retained means we'll keep it in the safe box of the company. of the company. We will not invest it in anything. Just as example, if I get $10 in my pocket, I will put the $10 in my pocket and I will not spend them. I will not spend them. This is the meaning of the word retained earning. Okay, the equity. We know the equity. Okay, it is like the capital plus equity. Okay, shared capital or share capital. Both are all decisions financing decisions is done by the CEO or the treasurer, but no hand for the manager in taking these decisions. Decisions also regarding liabilities, like the long-term liabilities and short-term liabilities. So these were the types of decision or business decisions, types of business decisions. We'll move on now for uh, the operating decisions like what? Operating decisions include the statements of financial positions like working capital management. What do we mean by the working management capital? It's the current assets that start with cash and return to cash within 1 year. That include, as example, the inventories, trade receivables, or account, you can say account receivables, trade and other payables, account payable, and cash. Yes. And statement of income, which is including the missing, planned downsizing. If you are trying to downsize, downsizing is mean shrinking in the operations. You are shrinking or down, you are down in investments. You are lowering the level of your investments. And productivity indicators, rewarding simplifications, cutting back users' activities, rewarding quality work, empowering workers. Empowering means giving them the power or the authorities to make decisions. This is the meaning of empowering, and zero-based budgeting as well. And zero-based budgeting, those are the things which are operating decisions regarding the statement of income. We do this for the statement of income. Okay. What is the matching principle for the financing decisions? Matching principle that if you had short-term loan, then what we say can say that current assets is to cover the current liabilities, and fixed assets is to cover the fixed liabilities. So we call them matching principles. As example, if you are investing in buying or like selling ice cream, so ice cream is a seasonal activity which starts in the summer only and ended by the summer. So in that case, based on the matching principle, you don't take a long-term credit. You should have a short-term credit because your activity will be done in within few months. When you take short-term credit, the rate of interest will be lower. It will be matching with the kind or type of the activity which you will do. Sources and forms of financing also. This is very important. Cost of borrowed funds and financial mix. Those are the things which are the financing decisions are concerned, or the focus, or the what the financing department focus upon in its own decisions. Matching principle, sources and forms of financing, from where I will bring the money. Am I going to bring it from this source A, which give me the interest rate is 3%, and source B will give me with the interest rate of 10%? Then I'm looking for the resources which I will get or grab the money from with its lowest interest rate. Cost of borrowed funds, and this is what we are talking about, just it's very related to the second point. And financing mix. Financing mix means that don't put all the apples in one basket. Don't put all the eggs in one basket. You should diversify. You should diversify. As example, you should invest in some funds, in some securities, in some treasury bills, in some stocks, but not to put all your investments in one thing, because we have a decision, a kind of what we can say that diversify or diversity reduce risk. Diversity reduce risk. So when you invest in many things and you have a portfolio, we call it portfolio of investments or investment portfolio, in that case you are on the safe side. But suppose that you put all your money or your investments in stocks, and all of a sudden happen recession or fall down for the prices, or deflation in the society and the economic, then in that case you will lose too much. But if some in dividends and some in treasury bills and some here and some there and some in investment in houses or lands, premises, whatever, then in that case you did the right part. The capital assets research and development, this is very important, is to know what the consumer need and develop the product based on the needs of the consumer, because we consider always that the consumer is the start and the end of every business. Expansion, the expansion decisions, new plans is related to the expansion. Modernization, if you are going to update the systems in your company, as example, bringing new machinery, training the people for using these machineries, promoting and evaluating to a new hard softwares in your company. Okay, and equations as well. Equations like it, you can say the simple meaning of the equation is that the big companies or the large companies buy or contain the small companies inside it, or small investment companies. This kind also is shown up now because some companies, instead of bankruptcy, they go within the big institutions as a kind of defense and a kind of struggle for existence. We have also the corporate transparency and accountability today. Today, it must be, you must be very disclosure. You must, everything must be clear. For the consumer, you cannot cheat the client. You cannot say that you are doing profits while you are losing. No. And it's also governed by a government legislations and corporate governance. And also, there is a corporate culture now, emphasize on shared values and beliefs. And the global accounting and financial statements today, those areas all are assuring and always stressing upon the point of ethics, using the ethics in everything, in accounting and financing, in management. And one of the piece, the ethics, it depends on the, to say the truth, to be very transparent, to have a fully 100% disclosure. Okay, that was about chapter one. Thank you so much. Stay safe, take care of yourself. Have a good day. Bye bye, everyone. Bye bye.